Ciao, this is Davide Biocchi from Italy, and I'm really happy to welcome you in this intermarket analysis. So let's start with the euro dollar, and as you can see, let's go in further details. Let's say that recently we have seen a sort of ascending triangle that we can clearly see here. This is the complete triangle. There was a breakout that could have as a target this price at 1.143, but the market was unable to reach this level and later, let's say, came back. So will it be again in the previous trading range with the minimum here and especially this 1.119 here as a, let's say, a minimum? Well, we don't know obviously, but the market can continue rebounding here and maybe maintaining that target. So this is something that we will see very soon. Let's switch immediately after to the commodities like the gold and like the crude oil. So for what concerning the gold, we have seen right now that the gold was able to move above the price of 1,835 and is able to go there and maybe to stay above this level. In case of the price, the target could be in the area between 1,865 to 1,870. So more or less this is the main target, and the next one could be 1,915. So this is more or less what can work on the gold that is again in the process to try to move above the very important support. For what concerning the crude oil was able to remain above the price of 85. This is a quite important thing because it is above the previous high that we have seen here. So it's really important. If the reaction, if let's say the action to go above this price will be rejected, maybe we can continue assisting at a trading range that can involve again a price returning to $62.5, having this 75 to $76 as an intermediate value. Don't forget that the price that we are, let's say, familiar with today are the highest since 2014. So this is something that the market is involved with, and a lot of banks told us that we can expect also target around 100 per barrel. So let's see what is going to happen. Immediately after, let's start with some indices, but before, let's have a look at the 10-year bond future that is coming a little bit back. Let's say that the movement that arrived here was meaning that the yield of this 10-year note was very close to 1.9. So in the process to go to 2% that, let's say, a lot of people are thinking could be a target for this. And this has an impact also on the stock indices that we will see immediately after. Let's start with Europe, where we have a DAX that is continuing the trading range that more or less is still yet back to the price of April, so 15,500. It's easy to say that we are in a trading range between 15,000 to 16,000. To be honest, we have minimums here around 14,800, and we have two maximum here around 16,250. So more or less, it's this trading range that we are looking at, and we need the market to move strongly or above or below of this minimum to see a next real trend, because otherwise we will remain in this, let's say, sideways that is going on since at least 8, let's say even 9 months since now. So this is a quite interesting thing, and let's switch a little bit after to the Euro Stock 50 that is in a quite similar situation. It's not in a real sideways, but it's not so far. Not from the price of April, that is this one, but from the price of July, that more or less is around here. 4,250 is, in my opinion, a quite relevant level. There is a story above and a story below. We have 5 minimums in a row here that can work even again if the market will reach again the price of 4,100. But at the end, 4,400 still remain the very important level that we can see here. Immediately after, let's say, I think that we have to spend some words about the US indices, and today I will add something connected to the Russell 2000. After the long run that took place after the COVID, in the recovery after the COVID, since the beginning of the last year, 2021, we have seen this market entering a sideways. There was only one attempt to go above, and it was rejected by the market. Now we have seen recently that the market was not only going below this level, but let's say even strongly. So it's strongly below this level, and it's really important in my opinion, because this is what I call the street US economy, the street economy in US, and this is more or less really important to me. Let's switch immediately after to the S&P 500. The S&P 500 is, let's say, going down in a quite relevant manner. One support already was, let's say, was the market arrival, and then there was a breakout. So it's really important, the situation. And the next one, around 4,300 that we can see here. It's a quite relevant level. Will the market be able to go there? 4,300, 250? Let's see what is going to happen, because we have the S&P 500 not very close to the main support, but on the other side, we have the Nasdaq that is presently on a support. So what will happen on the Nasdaq? Well, we are right now, let's say, on a support area. So will the market react from here? Well, in case it will happen before the Fed meeting, imagine that the Open Market Committee will start tomorrow, and we will see the press conference on Wednesday. So it's very important to see what is going to happen, and let's say that in case of a rebound, probably also the S&P 500 will be involved. But let's say in case of violation of this very strong support, the next one is really important, and let's say it is something like 500 points below. So in my opinion, it seems to me that we are going to see a reaction before. Could it be simultaneously with the Open Market Committee taking place? Well, for sure, this movement of the Nasdaq was putting a lot of pressure on the Chairman Powell and the Open Market Committee that have to take decisions. So let's see if it will continue or it will stop here and wait for some words from them. So let's see what is going to happen. This is all from Italy. Thank you very much for being here. Bye-bye. See you soon.